All right, guys, let's break into a quick webinar here, breaking down this week ending 11/7/2025. This was phenomenal. I mean, Friday was a picture-perfect day of this edge and everything that we look for every single day, and that's what I want this focus to be in this video today, right? It's like the details. What do I actually need to see to pull the trigger? Friday's session was so beautiful. But looking back at it, right, it's nothing out of the ordinary, right? Like, this is what we look to trade every single day. And it's just really hovers around that same criteria of RBI, GBI, right? And basically, what does that mean? And then once we see that, what are we looking for out of this area of value, right? What sort of criteria are we trying to see as price retests the AOV? And then how do we actually put on a trade? Right, so we took a short play there. And we're just actually going to start with Friday, right? Friday is, once again, what is it we're looking for? And if you guys watch that that session, right, it's basically I start the day off by observing the 1 hour time frame, right? So when the 1 hour time frame is healthy, meaning there's no extensions, right? We price is just grinding to the downside. What is it we're actually looking for? And on this chart on the right, you're going to see, notice the moving average, all right? That 9D EMA. Notice how it's pretty much hugging price action. Price action's not getting super extended from it. And then notice the 1 hour GBI right here. This played one of the most important parts to our trading on Friday. Okay, so you'll see here I draw a zone right around that box on the 1 hour time, that 1 hour time frame right there. That's the 1 hour GBI, all right? So this is the same exact zone. Just 1 hour time frame, 5 minute time frame. All right. So now as price is coming back up into this level, this is where I'm looking for opportunity, right? Price comes back up into this zone. Now I want to see how price reacts to the moving average. Okay. So right here, this is 5 minute time frame. Look at the 20. We literally cannot close outside that 20. So we're using the 1 hour time frame, right? The 1 hour GBI, to help us better understand the context, right? This is going to say context. It's going to be butchered, all right? Look at that, context, right? We need to understand who's got the ball. Every single day, that's our job. Who's got the ball? Do buyers got the ball or do sellers have the ball? So once again, we go back to that 1 hour time frame, GBI. And like everything revolves around the GBI and the RBI. Right? That's what gives us the context. When I see a GBI, whether it's on a 5 minute, 15 minute, 30 minute, 1 hour, right? This means something. This means right here that these buyers, these guys entered into the market hoping it was going to go higher, but it didn't go higher. It's now selling off. So these guys are trapped, right? This is going to say trapped. Okay? Like the essence of our strategy is based on people losing money. Because you could always bet on people to stomp out of their trades, okay? And I'm talking professionals. So this zone right here, the GBI on the 1 hour, gets disrespected. And once again, on a lower time frame, we're going to see this, right? We're going to see, look at GBI right here, retest, rejection, okay? We didn't capitalize on that trade. It happened too quick. I was still just looking at price action, but we still understood the context, right? The context was bearish. So now we were looking for opportunities to the downside. Okay, our first trade was right here. We hopped into the market right here. In reality, it was because of how sellers were respecting this 1 hour zone. But more importantly, the fact that we couldn't close outside the 20 EMA. So once again, we're playing a GBI retest, and we're using the moving average, okay, to determine who's currently has the ball. RBI, GBI, moving average. That is our strategy. So our first trade was this guy right here. Carlo moved to the downside on futures. Beautiful trade, right? This one move was like an $800 trade. Okay, so once again, you don't need perfection. All you need to do is be able to identify who's got the ball. We do that off the RBI, the GBI. Couldn't close outside that moving average on the 5 minute. So we entered in short as soon as price was continuing to the downside. All right, that was first trade. I took another trade. I ended up getting stomped out. Oh, yeah, it was this one right here, I think. Once again, though, not playing off the RBI and GBI, no continuation to the downside. That's the biggest takeaway right here. That's why that trade wasn't a good trade. But when you're playing off the RBI and GBI, you're going to get that solid continuation. This was trade number 2. Trade number 2, once again, off the 1 hour GBI. And this one was just even a little better because we had the 5-minute GBI right here. 5-minute GBI, drop down to the 2-minute, come up to the 20, can't close outside the 20, trade with the 20. Right? Like that Friday was such a good day, and it was because of how we traded our criteria. Right? Like we in that 1 hour RBI, GBI, once again, sellers are defending it here, sellers here, here, here. And then, so once again, we're using the RBI, GBI to better understand the context, who's got the ball. And then once we actually want to get into the market, we're going to use the 20 as our guideline. Right? Price comes up to the 20, can't close outside the 20, we enter in short. Our stop loss goes right here. Boom. Short play. Done. All right, trade number 3. We get another green bar that's ignored right here, but we don't get a 2-minute 20 retest, so we don't take a trade. Right? And it's not necessarily like we didn't know. We knew price had a high probability of continuing to the downside. It's just I didn't like the fact that the 20 wasn't close. So we ended up getting in here instead. Right? That's called sticking to your strategy. That's called being disciplined. That is called becoming a profitable trader. Being like, you know what? Yeah, I understand price might continue to the downside here, but my edge isn't present, so I'm just not going to trade it. I'm going to trade this one instead. Right? So we entered short right there, and then we added into the position right here and caught that good trade to the low. Right? Really good trade. Dude, Friday, once again, just a really good example of our strategy and how we look to trade it every single day. Just blueprint day. Really, really good price action. I want to start out with Friday, just make sure that we caught that in there. Let's go to Monday. Monday, once again, just same criteria, same approach, and Monday is actually a really good day to talk about. Very strong sell-off here in the morning. Right? I got the 5-minute time frame. We're getting a very large sell-off. We get a green bar that's ignored. I actually hop in the market short down here. Right? This was a mistake. Why was it a mistake? Because we were far away from the 20. Okay? Like, once again, you know, us being able to use the 20 helps us on so many different levels, and this is one of them in my opinion. Never trade far away from the 20, and this is primarily why. Green candle ignored, so now once again we have our area of value and we understand the context, and the context is bearish. So price wicks down, we get stomped out. I was able to stomp out of this trade right around here because I knew if this 2-minute GBI couldn't hold, we were probably going to see the 20, right? This is no man's land right here. You never want to be in this in a losing position. This is no man's land. Okay? You never want to be in this spot between structure and the 20 EMA. Because price is gonna, if price can't hold structure, it's very high chance you're gonna come back to the 20. So we stomp out of the trade. Price comes back up into the 20, can't close. We're in short right here. I'm in short as soon as this candle closes. All right, I want to be very clear here. As soon as this candle closes, after wicking into the 20, I am in short. Why though? Like, why right here? Because I know exactly where I'm wrong on this trade. If I enter in short right here and I put my stop loss right here, I know if price whips up and does something like this, I'm wrong. So I'm out of the trade. But I know if this holds, it's because sellers are present and they wouldn't allow buyers to close outside that 20. The moving average is a book. It literally tells you exactly who currently has control of the market. It's not always right, okay? It doesn't always work, but it does a lot of the time. This is why we use it. Another thing that made me happy about this short play right here was the fact that we couldn't close outside this area of value. We wicked outside of it here. We wicked right here. But we couldn't close outside the box. So the box was valid. Great short play to the downside. Monday was phenomenal. Hold on 1 second, guys. All right. So now as price. Yeah, Monday was clutch, dude. It just beautiful, and like, you know, you guys know I'm gonna say it till I'm blue in the face. Like, it's all about the criteria. Monday was one of those days, though. If you hesitated on that morning play, it cost you, right? It was gonna cost you, and because the rest of the day was just garbage price action. But once again, I mean, like using the AOV to determine the context is the most important thing, right? Like sellers got the ball here. And they bring price back up. And once again, what are we seeing? These are trapped buyers. Buyers are trapped. They're selling out, selling out. Notice this candle right here, guys. This green candle, or this red candle. Notice how we couldn't close outside the AOV. Like, dude, this is my new thing right here. If price can't close outside the AOV, that means it's holding, and we want to make sure that we're trading in that direction. Right? Like if you're struggling with finding an entry, or like maybe you got a little hesitation going on, or whatever it may be, wait for that to close, like respecting the AOV. And it's going to help you a lot here. That was Monday. Let's go into Tuesday. Oh my God, this was a great day. Hold on. Tuesday, phenomenal day. It was a one and done. Let me see though. Was it this day? Okay, so basically here, what we're seeing is classic break in structure off previous day low. So this right here is previous day low. Once again, 1 hour time frames for what? The context, right? Like we want to understand the context. We come to the 1 hour time frame. Context just means who's got the ball, buyers or sellers. Price rallies here in the morning. There's no play for me. This thing cooks like a bat out of hell. I'm super far away from the 20 EMA. So there's no trade, all right? No trade. Price then finally gives us this little GBI, okay? So once again, anytime like you're getting a massive rally up, it usually has that slingshot effect, right? That pendulum swings up, she also swings down. So we get a GBI. I'm not necessarily going to enter in on this one short, but I'm going to draw my box. So now the context is based off this GBI, okay? I understand buyers are here, but sellers just respected PDL. So once again, the context is telling me that, oh my God, look at this on the 1 hour. Couldn't close outside the 20. Look at that. Can't close outside the 20. It's for a reason. I don't care if it's the 1 hour time frame or the 1 minute. Once again, we get that green bar ignored. Price comes into it. Price comes into it. Right here, I'm honestly debating a long play because we just got a red bar ignored. And I'm using the 2 minute to guide me. Right? Like, you know, all those times we're like, oh, RBI I'm getting in or GBI I'm getting in and the trade doesn't go our way. The 2 minute will save you from stuff like that. That's where the 2 minute starts to save you. Okay, we're not getting clean entry criteria to the upside. So we then finally get ourselves a green bar right here that's ignored. I'm in short. I'm in short right here at 678. My stop's right up here. Now I'm targeting open print. Bam. Sells off right into open print. Like, well, not right into it. We had this pullback right here. But all in all, what are we doing? Playing critical level to critical level. Okay, if sellers hold here, I'm targeting here. If buyers hold here, I'll target up here. But you know, the rest it just remained bearish. But that was a one and done right there on Tuesday. Really good day, great price action here. Wednesday, garbage day. Just really not that good. Hard to find entries on Wednesday. Wednesday, it would be important to not overtrade and not put yourself in a lot of... I mean, I'm just speaking on my behalf. But Wednesday, in my opinion, I just really couldn't find anything I really liked. We did get a red bar ignored that creates, once again, the area of value right here. And until it breaks, we're bullish. Like, I cannot stress that enough. Until this zone breaks, I am bullish. I'm not shorting into it, okay? I'm not, like, none of that. This is a RBI. It is bullish until we break. And, I mean, I took one trade right here and got stomped out on this candle, and I was like, okay, today's not going to be, today might be a little shitty. And once again, though, like, if our edge isn't working, it's for a reason. The market's probably choppy. Maybe we shouldn't be trading it, right? Like, if I get a clean RBI, GBI, 2-minute 20 retest, and there's no continuation, it might not be what I'm looking for. Great 2-minute 20 retest right here. But I was not in front of the chart right there. I missed that trade. And then I ended up taking a long right here that just had no continuation. But still, good criteria. Great criteria. I got in right here and I got greedy. I hopped in the market long. I was up about $300 and I wanted it to go further, and the market just reversed on me and I stomped out around break even. So that was pretty much it for that day right there. Great little HPT crossover criteria right here to anybody that caught that at the end of the day. Look at that. GBI, bam, sell off. I've been really trying to focus a little bit more on the end of the day as well, just because the opportunity there is crazy. This day was beautiful day right here on Thursday. I didn't capitalize on the morning the way I wanted to. I wasn't in front of I kept getting called away from my computer. But look at this. Just let's do a quick breakdown right here. GBI. Like, every day, I'm looking strictly for the GBI. GBI, green bar, ignore. Oh, wait, is this? Okay, hold on. I think this was the day. So, I think you guys seen me starting to talk more about the 1 hour time frame RBIs and GBIs. Check this out. So, right here on the 1 hour time frame, we get an RBI to the upside. If I draw my zone around it, check this out. Like, the same way we use candles, the RBIs and GBIs on the 5 and the, on the 5 minute, I want to use them the same exact way on the 1 hour. So, like, if I'm watching this trend to the upside and sellers just completely abolish this trend, and it's telling us that they got the ball, right? So sellers come in like a bat out of hell here, and we get a really nice green bar ignored here off open print. Valid trend right here to the downside, and price just really starts to sell off, and we get that beautiful GBI right off open print. Like, this is once again why we really like these levels. Open print right here. Green bar ignored, get the context going, strong sell off right here, nice 2-minute 20 retest off the open as well. I mean, you know, just really strong selling. Market keeps selling off. And what did I do this day? Okay, we got ourselves a green bar right here, and like pretty much anytime I'm getting an RBI or a GBI, we got to throw the zone around it and just look to play those 2-minute 20s. Those 2-minute 20s. Price is holding the 20, just trade with the 20. And it's going to feel super uncomfortable at times. It's going to be like really trying to fake you out of your trade. And, and large money just really wants your money, and just follow it, follow the trend, and do the best you can here to take advantage on these. And then we got a very similar move right here to the upside as well. So this was not like, I don't want to say it was a challenging week for me, but I did come into this week trying to scale up, and it wasn't the best price action, but what's helped me is using that 2-minute bar as my stop, right? Like, I think we did a really good job of that on Friday. Entering into a trade and just putting your stop loss directly above or below the previous 2-minute bar that just really does. I mean, any futures trader is very easy to do. Not everybody trades off their chart like that. But if you can, it's a really good way to make sure you're locking in and securing your profits. And basically all you're doing there is, like, if you're entering in the market short, right here, my stop loss is going to go, I'll just make a new line right here. So initially, if I'm hopping in off this candle right here, my stop goes above the candle I get in. And then as the price keeps moving down, so does my stop loss, right? It's going to hug the high. I give it a little buffer, but more or less, we're going to keep putting it above the previous 2 minute, right? That is how you're going to, it just keeps you like in the present, gives you something to do. And it's like Todd was saying, it's like a system that is just going to help pull the emotion out of trading. But yeah, all in all, Friday was a great day. It was such a good way to finish the week. Another thing, like, I was able to capitalize on this move to the upside, and I just want to show you guys what I did. So once we got that green bar ignored right there, I'm like, all right, I want to get in this. And I didn't really get the 2 minute 20 retest I wanted, but I still ended up entering into the market long right here, and then like right here, and I put my stop loss right here. So like, notice what we're doing here. I'm not getting the 2 minute 20 retest, but I know that buyers got the ball. Like they're pushing right now. So I want to participate, right? I want to be a part of it, but I'm not getting the criteria I want. I'm going to enter in, and I'm just going to put my stop right below the previous 2 minute candle. That is a really good way to get into the market and still manage risk appropriately. Just use your 2 minute candles. Be like, okay, I'm in the market here. I don't want to risk a lot. I'm going to just put my stop right here. And, let her go. Because we're not always going to get perfection. So that is a really good way to, like, not overthink it and still be able to take advantage of the trend.
Yeah, that's nice. I like that.
Hey, Todd, you do that, right?
Yeah, because sometimes it ain't going to give it to you. But what it did give to you right there is that candle I've been talking about, wiping out 4 or 5 candles to the left.
Yeah.
I mean, that's that candle I'm always like a broken record on.
Yeah. Same.
I mean, that candle should have follow through, and if it don't, like you said, you know exactly where to get out. Mm-hmm. I mean,
if I'm hopping in that, like say I'm getting in, I'm watching right here. I'm like, all right, and once again, what's the red flag? The alert goes off as soon as this red candle gets ignored. As soon as this red candle gets disrespected, bam, flags are up. I'm ready to buy. I'm not going to buy immediately. I want to see follow through. I don't get my 2 minute 20, and she starts taking off like a bat out of hell. I'm in it long, and my stop is right here. And then once this candle closes, my stop's right here. Then once this candle closes, my stop's right here, so on, so forth. And you can literally ride these. I made like 1,500 on this trade. And all I was doing was just like, this is something that I highly recommend if you're trading futures. Options, it might not be as easy as this to do, but trading off the chart on futures, this is definitely something you can do. It's a great way. I mean, you could do it with options too. You just got to be quick to put in your stops. Just put it in and put like a 15% stop on it and just let her do her thing. And if you're trading options on the chart, then obviously, yeah, you can do that as well. It's a great way to stop overthinking and still being able to capitalize on trends. Friday was such a good day though, man. I've went back. I've watched our session like 5 times. I made it really simple too. All you literally have to do is I put each trade time in the description. So all you gotta do is click it, and it brings you right to the trade. And it's a great way just to study why are we actually pulling that trigger. The more I study my entries, the better I do. So all in all, guys, a good week in my opinion. And I feel like we're really starting to dial in on like our execution, and I really like where the team's at. Like the team is definitely understanding what it like. It's all about clarity. Like, why are we getting in? That like why, and if you know why to get in, you like if you the more clear I get with why I'm actually getting in, the less retardation that occurs. Like the more I know, okay, like if I get in here, I'm just gonna use 2-minute 20 or the 2-minute candle as my stop, or even if I'm just trading the 5-minute chart. If this is why I'm getting in, I take way less bad setups. And you guys see me on Friday. I took a bad setup on Friday, but I didn't let it get out of hand, right? Like on Friday, what I do? I went short on this candle. I went short on this candle on Friday. And I didn't let it get out of hand, right? It respected the 20. There really was no RBI. I wasn't really playing. I was just playing off 2-minute 20, and I was about to get spanked. So I didn't let it get out of hand. I put my stop right above the wick. So once again, like if you can just master, even when you do make a bad trade, that you know exactly where to cut it, and you don't let it spiral. And Todd, you helped me out a lot with that. Like there's really no point to ever risk more than one candle on anything, especially trading futures, because you get right back in. So
yeah, to me that's the most important part. Everybody looks at like the entries and where I'm gonna get in and
where
I need this.
Yeah,
but that means nothing without a good stop out.
Yeah,
a good stop out is just as good as a win.
No, more important. I agree, bro.
Yeah.
It's like I've had months where I've made thousands of dollars, but if I didn't, like, I've given it all back very easily, and then some, and been like, dude, how I have I literally had a month where I had a 93% win rate and I lost money because I couldn't manage my losses. Like it don't matter. You could have 100 winning trades. If you're trading all your profits in that next trade and you don't know how to stop out, you are not managing properly. You will lose all your money. And it may sound crazy, but that is the reason why 95% of traders do not make money in this game. One reason, they can't master the stop out. So
yep.
Friday we did. I was glad that happened. Like I think it cost me like $400 something. I didn't let it bother me. I was like, okay, on to the next. And then we ended up absolutely crushing it for the rest of the day. And Friday, turned out to be over a $3,000 day. And it was literally just using those 2-minute candles in the 5-minute RBI GBIs. So, all right, guys, I got to hop off. I appreciate y'all for coming. Stay dialed in and just stay focused on what works and just execute that over and over. I love you guys. Peace.